When live trading, and particularly with Forex, we are often dealing with leverage. So we are able to trade with balances that far exceed our actual account balance. The broker then needs some collateral to know that if we lose our trade, we can actually pay them back. We can lock out a specific amount of our account balance by something called margin. Now, margin is used in live trading and basically means we are limited on how much we can bet. So this is much more related to live trading rather than backtesting, but it's good to know these limitations early on so we don't get overexcited thinking we can trade 30% of our account per trade. So relating this back to the risk plan, I know that with my broker, my margin generally maxes out around the 12 to 14% of my total account balance based on the strategies and timeframes I'm trading. So that means I can get about 6 to 7 concurrent trades if I'm trading at 2%. While this amount does vary based on the strategies and timeframes I'm trading, it's just good to have a bit of a ballpark. So let's make up a few more strategies. So we'll call this my second strategy. And let's say this one's on the 15-minute and 1 hour time frame. I'll put a 1% risk on there. Let's say this one was a 1.4 to 1, and let's say this was a counter trend strategy. This one may be 64.3%. And then we also have my third strategy, which we will do on the 4 hour and the 1 day. This one also will be 2%. Let's say this one had a 1.85 to 1 ratio, and this was actually a consolidation strategy. So when we're bouncing between two areas. Now this one, let's say this had a 58.2% win rate. So those are our 3 current strategies, and we can add more to that if we would like. Continuing down, maximum account exposure. Calculate out the maximum account value you are comfortable risking at any given time. Max exposure refers to how much of our account we are willing to risk at any given point. So you may just want to jump into every trade that fits your strategy, and that's fine, but you also have to be comfortable with that. This all ties into your maximum exposure. So at any given time, how much of your account are you willing to risk? So hypothetically, let's say you have 15 trades open, each at a 2% risk. That means you are risking 30% of your account. Let's say your account is $1,000, you are then risking $300 at that exact moment. If there happens to be a world-scale news event and the markets go crazy, are you comfortable with 30% of your account being on the line left to uncertainty in an erratic market? Or would you feel more comfortable if that was 20%, 15, 10, maybe 5%? It's going to be completely up to you. It could be 4%. Maybe you only want to be in 2 trades at a time. Or we could say we want to be in 10% exposure, maybe 12, maybe 15. It's completely up to you. For this example, let's say 8%. Now, drawdown is that percentage figure we could see in our backtesting, which talks about our biggest losing streak. So what's the maximum losing streak you are comfortable being on? At what point do you take a break from trading and come back to it later on? So let's say the max drawdown was 12%. You were comfortable losing 12% of your account before you say, hey, I need a break and I'll come back to it. Or let's say you're comfortable losing right up to 50%. You trust that the market's going to turn around. Once again, this is completely up to you. So I'm going to say 20% here. So going back to that hypothetical $1,000 account, let's say I've been on a losing streak and my account balance is sitting here at $780. Well, that means I've lost more than 20% of the account. So my drawdown break refers to a cooling off period after we've exceeded our maximum drawdown. So we could say this could be 24 hours. Maybe you just need 1 day away from it. Maybe some of you who are very eager want to just take 12 hours out, take half a day off and be okay. Some of you might say, this has been stressing me out. I need a week off. Some of you might be very stressed and say, I need a month off. This is once again going to be completely up to you. I'm going to set mine for now to be 48 hours. Missing trades. If you notice a trade set up late, how will you approach a missed trade? How are we going to deal with it if the perfect setup happens at 2 a.m., but we get up at 6 a.m.? We needed to find out what we're going to do in that circumstance. So for this example, I'll say I will keep the original trade setup and enter at market price if in the red, or place a limit order if in the green.